What's going on, guys? So today I actually just wanted to do a quick video. Well, actually, I don't know how quick it'll be, so stick around if you'd like. But I kind of want to do a video on how to spot if a stock is going to go up or down, how to find out where to place stop losses, and how to know where stocks are headed in the short term and long term and all that. So I just want to go through a few things that I do when I'm looking at a stock for the first time to find out where it's heading. So the first thing that I would do is obviously you have to have some type of charting app, and I use TradingView. But the first thing that I like to do is take a look at the history of the stock. So in this case, this is American Airlines. So you get to kind of see all of its history and where it's been and where it's been, where it's got support, where it's found resistance and all that. So the first thing that I usually do is I find its resistance points. So as you see, the stock came up around February of 2007, and that's where it found, actually January of 2007, and that's where it found its first peak. And then it did an accumulation phase for quite a long time, almost 8 years. And then it found its next peak. So then, obviously, it did a little double top action, and it did break out a little bit and had a fake out, and then it dumped down. So this whole process from here took about 2 years, almost 3 years of this range. So that was a long accumulation phase in this range, but it was, at this point, it was only worth like $2. So, as you see here, what we're doing is we're going to take this trend line from that first initial resistance. We're going to ignore this breakout here because this is kind of like a breakout of a resistance that was long term and it was rejected. So even though it did find resistance there, in my opinion, that's just, it's kind of useless, because if it was a real confirmed breakout, you actually wouldn't have hit resistance right here and just fell. You would actually be able to continue shooting up and until you find a resistance. And that's something that I can get into in another video if you guys like this kind of stuff here. So what we would do, like I said, we pull this resistance line all the way across. So that now you know where resistance would be ahead of time if you're entering a trade. And that's huge. And then with the support, the same thing goes. Even though that this price down here was $2, it still is going to come in handy when you run this resistance line all the way across. And even if the price action falls below the line, you still just only match up the first few wicks and run it straight across. And as you pull it across and pull this across, you basically get some type of pattern. And you get to see what the pattern is, when it's going to break out. If it did break up, where could it go? Where could it get rejected? And all that. Now, when you have a massive pattern like this, normally the end of the pattern is called an apex, which would be where the points actually meet and it gets to the narrowest point. But most of the time in a stock, you get a breakout somewhere around this point in the pattern. Obviously, it's all different, and sometimes the longer that you stay in a pattern, the further it coils, which means the bigger breakout that you actually would get, the more force that you would get. But at the same time, the longer you stay in the pattern, sometimes if you stay too long in the pattern, it actually ends up breaking down. So you really want to see a breakout somewhere in this range here. So, I mean, you can't really just say, well, we should break out. I mean, you could, but, well, we should break out sometime in year 2025. You could say that, but it's very possible that this thing could come up here and work its way up at any given time and blast off just like that. So what we're going to do next is, look at the RSI. This is a key thing to notice, because when you look at the RSI, you can draw patterns in the RSI as well as seeing how this is kind of like overbought and oversold type of thing. When it's overbought, it's usually up in this range, and when it's oversold, it's usually down in this range. I think I'm saying that correctly, but that might be too much information needed anyway. But this is on a weekly chart. So one thing you can do on the weekly chart is you can find the peaks that it topped out at and draw a trend line across. That will show you how high the RSI could actually come before getting rejected. And then you can draw trend lines on the RSI as well to find yourself some type of pattern that you're in by connecting the wicks the same way. So if we look at this in this scenario, you can see on the weekly that we came up and tested this pattern actually right here. So this is showing the same pattern that we're in above, but also on the RSI. That way you can get even better view of where we're at in this trend. So as you see with American Airlines, in the past we have came up and touched this trend line quite a few times. 1, 2, 3. Now, it doesn't always have to happen the same exact way, but it is good to see that it's not just usually one rejection. And also it's good to see that we're getting close to the end of this pattern. So whether we decide to have a little bit of accumulation in this range and then blast out, or if we have to come all the way back down and then make some type of W and blast out. Now that's something that the smaller time frames usually can help you figure out a little bit. So, but as of right now, we did get that rejection right there and we're starting to fall. But you can tell that the RSI is a little bit rolling up, and on a weekly time frame, it takes a long time for this to move. So that's something to consider. We did come down and we kind of fell through this support that should have held as, it should have held as support, but we fell under, which probably scared a lot of people. But the big money was buying all in this area because that's usually what they do. And that's just how it works out. But this is on the weekly, and these moving averages on a weekly time frame, daily time frame are huge when you're going for like a long play of a stock. And the reason that they're so huge is because they tell you which way the trend is heading. So this yellow line is a shorter term moving average, and the red line is kind of like a mid-term moving average, and the other two are the long term. Now, whenever your shorter term moving averages are below your longer term moving averages, you actually are in a bear market. And when your shorter term moving averages, which I have colored in yellow and red, are above the longer term, which is blue and green, you are in a bull market. So what happens is, as the buying progresses and you get this accumulation, you get these moving averages starting to turn upwards. And that's how you can get a nice sign of whether or not you are going to be looking for a bull market or not. Just give me a second here because my phone is looking like it's about to die, and I am in a car right now, and it would be nice if I had a charger. So sorry, bear with me real quick. I don't know if I have one though. This might suck. So I'll try to see what I can do here. I don't know if I have one. Shit. Great. I wasn't expecting that to happen here. Oh, here we go. Wait, is that one? Nope. Let me see. Sorry, guys. There we go. Got myself something pretty cool. It's a little phone holder, actually, that you can stick to the car, and it is electronic, and it also charges your phone with a magnet. So anyway, sorry about that. So as you see here, this is on a weekly time frame, so it does take a couple weeks to happen. But you can see this yellow is actually moving up to cross above the red, which is actually a great sign that we could be heading up to start a bull market. Now, this specific action right here is called a golden cross. That's when a shorter term moving average moves above a longer term moving average. So you will get some pretty good at price action when this yellow blasts above the red, and then if the red goes above the green and the blue, obviously, so on and so forth, these are even longer term moving averages. You get an even bigger pump. So the second thing that you could do is figure out, where the most recent rejections have been, because you have your big pattern, but then you also will have a patterns within patterns, which is, it's a little crazy, but you can find support and resistance by adding trend lines in this scenario. And you line up the first few wicks. Don't try to perfectly match something because it looks so good. I'm just lining up these wicks right here. So I would just line those up without even looking, right? Run it all the way across. And then you can kind of see what's going on. And look at that. Look at how perfectly this works. So you have your support line right here at 1403. And you have your resistance line that has been rejected many times up here at 2188. So this is easy to say that we could be heading up into this $21 range fairly soon by looking at this. So your next thing is you could figure out the pattern you're in. And now this is all on the weekly. Of course, you can find yourself with many other patterns on the smaller time frames. But sometimes using the weekly will help gather you more information. And when you look at the smaller time frames, it becomes a little more clear. But right now, this stock is in a falling wedge, which is actually a bullish pattern. When it's pointing down, when it's pointing up, it's a rising wedge, which is a bearish pattern. So if you actually wanted to find your breakout, you would take a measured move, a trend line from the point, from the resistance to the support at the very beginning of the wedge or pennant or any pattern. And usually a pattern would break out somewhere in this range of the pattern. Occasionally you'll get it at the end, but normally the longer it takes to get out of here, either the bigger the blast off if it actually takes off, because you get consolidation so much in here. But unfortunately, for the most part, when you get down into that end of the apex like that, you actually end up breaking down. But one cool thing to see is this spinning top here. Now, this spinning top at a top of a trend is usually a bearish signal, but when you're at a bottom of a trend, it actually shows a trend reversal. So we're not anywhere near a top of a trend per se. The top of the trend is way up here. So if you looked over here, you could either see a spinning top that would signal downside, or you could see, notice there's a spinning top before every red candle streak, or you could see a hammer. So this is like a hammer right here. This is a hammer. So a hammer is a reversal candle. That's something very key to know. But when you have a reversal candle at a bottom of a trend, it's usually signaling there's a reversal of the trend, so you're going to have an uptrend after that. And at the top of a trend, if you see a hammer reversal, you're going to see a reversal of the trend, which is a downtrend. And they're going to give you different signals all the time. So sometimes it'll be ahead of time, you know what I'm saying? So it's always good to see what's going on. We had this uptrend here, and then we had a spinning top that kind of let us know we're getting close to an uptrend change. And then you had this spinning top here that signaled the downtrend, and then you had a spinning top and a hammer reversal candle that signaled the uptrend, and so on and so forth. So I mean, you can look out for those. Those are great things to know, and they will always occur to let us know what's going on ahead of time. So anyway, let's get back to this. So what was I going to do? Oh, yeah. So you have your measured move breakout. So when this breaks out of this pattern, whether it's 1, 2, 3, 4, 5 weeks away, which is looking at like February 16th, February 8th, somewhere around there, your measured move of this breakout would be to 1778. Now, that doesn't mean that it's going to blast off in one day all the way up there, because it can just come up a little bit, flag out, come up a little bit, flag out, so on and so forth. But if you were trading this, you could actually either buy the breakout or start accumulating now and plan for it to come in this range. And you would just put a stop loss below this trend line. Now, the thing is obviously it's a falling wedge, which means that if you bought here, then your stop loss couldn't be right below the pattern, because if it continues down, you actually would continue down this trend, and you could have a low of 1378 before you blast off to these price actions. So when you're in a falling wedge, it's not as easy to find a stop loss placement. So if you either wanted to enter, you could expect that this price could come to somewhere in this range of 1429, and then you could put a stop loss either below this line, 1368, or you could play a breakout and wait for it to have some green candles that get up in this range, and then buy somewhere around this level at the time of the pattern. So you'd have to really watch that thing. I don't know if that made any sense or if it was too confusing, but either, needless to say, let's so we know that golden cross is coming in, which is a great sign. Let's look at the daily and see how our patterns play out here. So now we have our patterns in here, and we get to see exactly what happened. So this looked like some type of pennant in here. Even though we fell out of support and came back in, we went inside this pennant here, and when we got to the end of the apex here, where these trend lines all converged, we ended up having all of our moving averages create golden crosses and blasted us up. So along with that and the breakout, we ended up with the move to where we are now. So now we actually got back inside this falling wedge here, and we're inside of this. So your upper resistance is 2110, and your lower support now in this pattern is around 1369 and sloping down, so 1330. You could put a stop loss somewhere in this 1315 range if you wanted, or you could ride this pattern. And obviously it changes every day as it moves down if it wasn't to break out. So as you see, we are testing resistance right now in this falling wedge. So it doesn't have to drop down and come back down here. It's very possible that it could actually end up breaking out somewhere in this range. And if it did, then you would move your measured move up in this range and see what the breakout could be. And now we're looking at possibly almost $20 for a breakout there. And as of right now, we are holding support on this 20 EMA here, which, that's one way you could play things, but it doesn't always follow these trends. But, as you look back in the past here, we fell below it, we wicked up, got rejected, came up, got rejected again, created a little small spinning top, and we started coming down. And now, we're trying again to break out. So if the next daily candle decided to come above the 1633, 1641 level and find support, then you could be looking at a potential breakout on its way upwards of that 1932 level. There's many other things that you can use in technical analysis. You can use fib retracement levels. You can use some new thing that I'm learning, which is confusing as hell. Ichimoku cloud. I can't even pronounce it. This is something kind of cool, actually. So anytime that the price action is above the cloud, which is this green area, you're in an uptrend. And when you're below, that's going to be your biggest resistance point. So when you first break above it, you end up having a massive blast off. And then your white trend line, your white line here is actually a pretty good support. And when it crosses down under the purple, it usually has a pump. And when it crosses up above, it has, maybe it's let me see. If it crosses above the purple line, I'm just learning this, so I might be a little confused. I guess if the white crosses down below the purple, you have a drop. And if the white crosses above the purple, you have a pump. So I guess that's pretty cool to see. So right now, obviously, it seems like price action is actually following that white line there, which is around 1565. But then you also have major support on this cloud here. So every time it's came down and tested it, it's gotten a bounce. So I mean, if you were looking to potentially look for a cheaper place to buy, you could look for 1552, and expect that it could potentially drop to that point, and then you could have your stop loss below the cloud if you'd like. If you're, depending on, your risk to reward and all that. I mean, it looks pretty good to me actually in this chart. But anyway, and then there's more to it. There's TD sequential that I like to use. This shows every candle is considered one candle. Then you go up to a 9, and you can flip at any time. So you have a 7 candle here. The next one usually would be an 8, but it was a 1, which resets the candles. Then it does it again. Then you can get a 9 flash, and if it's green, usually that means the next candle is going to be a green candle. And if it's a red, usually the next candle is going to be a red candle. So it's kind of a cool thing to see. So, whoops, get rid of that. What else? We have TD, we have, what is it called again? Fib retracement. So we have fib retracement, and you take it from the swing low to the swing high of everything, and you get to see where you're getting resistance based off of the Fibonacci sequence levels, and you can see where your support is. And look at that. That's kind of cool to see that the 0.382 fib level is actually the same level as the Ichimoku cloud. So that's showing me that 1552 is a very, very strong buy zone. So most likely that's going to be holding us as support from now on. And over here, you can see it did hold us a lot right here. And then we did break below it, and we fell back to this line, came back up, and now it's looking like that 1552 is going to be great support. And then it shows your resistance here. We're following this trend line here, but you could catch some resistance at the 1666, and if you break above that, you would be looking all the way up into this range, and then that's where the sellers probably would come in, somewhere in this range. So you would look for 1858, because that's the old portion you got resistance at, you got rejected at. And if you broke above that, then you would be looking for higher targets. So there's so many different tools and ways to do things. And then you can look at the RSI as well, and that'll tell you what's going on. So if it's pointing down, obviously it means that the pattern is the stock is coming down a little bit here. But sometimes the daily moves so slow on that RSI that you would use the smaller time frame to really see what's going on. And what you want to do in that scenario is look at like an hourly or 15-minute, and you can kind of see ahead of time as the RSI is moving and rolling up or down to see if you get a bounce or not. Which, being way down this low, usually stocks bounce in that general lower range. So, I mean, for now, you're seeing a little bit of downside here, but it looks like it got rejected at that pattern. So you would look for your support and then see if it can bounce there. And if it can't, then most likely you would expect it to come back down and test the bottom support again. But I'm feeling like you're probably going to maintain this support here as low as 15.52, but depending on how this pattern plays out, you could draw a trend line from right here, because we had support there, and draw something like that, and you can almost expect that this is going to be your new support and this is going to be your new resistance, and then you're going to bounce in between here until you get your breakout. So, that's kind of how I screw around with things. And as this 20 EMA here rolls up and this one rolls down, you get a squeeze, and that's going to cause the price action to go one of the two ways. So and then lastly, the last thing I'm going to show, and then that's going to be it for this video, is the MACD. So the MACD is very helpful because it shows when the buyers are buying and selling. So whenever you cross up, you usually get a pump in the price action, and when you cross down, you start getting sell-off. So it's a good way to find out if you think that the stock is going to get a sell-off or not. You would look at the MACD, and as you see, it crossed negative right before this price action started selling. And then when it crosses up, it would cause the pump up. So you would keep an eye on this, and as it starts to roll back up, you would get the buyers again, and then it would push the price back up to the top of the pattern that you're in. And then as long as it stays within the pattern of the trend lines that you drew, as soon as it breaks one or the other way, you'll know which direction it's heading. So you can have your stop loss below or your entry price above, however you decided to play it. So, and it works on all time frames, but obviously on the smaller time frames, these moving averages can cross negative, positive, and it doesn't mean that it's in a bear market or anything like that. They're just going to do that, you know what I mean? It will tell you which way the price action's going on a shorter term moving average, but each one of these are 15-minute candles anyway. So, but yeah, so I think that's covering quite a bit of information. I hope that helps, and hit the like button and subscribe if you guys like this stuff, and hopefully these tips and tricks will help you guys to figure out where to buy stocks, when to buy them, and how to know which way the price is going. All right, guys, take care.